The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this Wednesday, February the 19th. And this a special moment here because under every condition that I was looking at, there was just a really good chance that we made a peak A yesterday. There'd be an extension today down, not that much, but an extension that would go down into the Thursday hour and opening hours. Well, this is a very impatient market. And one of the reasons why I keep wanting to go long every day, and we have positions that we're putting on, got another one today. Actually, we were very lucky to grab it a penny off the low, and it's up about 5% already just today in the first hour and a half. One of the reasons is I spoke yesterday about a rotational correction unfolding, and at the same time pointing to areas that seem to me to have the chance to move higher. And if that's the case, then you cannot be looking at the short side unless the specificity of your short is such that it is giving you an opportunity to get in on the short side on a stock that has been really weak or has made an all-time high and is showing a tremendous divergence between the technicals or whatever it is. Doesn't matter what it would be, but it is showing a divergence which will allow you to at least enter a short position, and you know exactly where your stop would be, probably just above the all-time high. I don't want to waste any time. I'm just going to run the numbers. I have been extremely positive. Every time I've been looking at the charts, I just see strength. And let me show you this. The E-mini March future has gone from 1732 to today's high of 1844.50. And it is still, I was absolutely convinced that we would get peak A today, because we got that already in a number of the indices. But in fact, this is still leg A. And yes, there's a little bit of a divergence there, but the stochastic's at 96% and the MACD is very strong. There are technical tools that if you use correctly, gives you a much greater chance of being right with the trend and staying with the trend than if you arbitrarily think that emotionally that the trend is moving up. I said yesterday to my subscribers on my opening call, and I showed them that there's a pattern here, rectangle formation, that can last a lot longer than your patience. It should test the lower boundary, in this case the 1831 area. It went under it. It went to 1830 just earlier this morning, and pop, it breaks above 1840.25 to do what? To get to a leg, and I'm going to call this E for now. But what it's done is it's an E, and it's raising the base. And I was absolutely sure that, in fact, instead of the S&P futures being up 375, at this particular point, they would have been down 475 to 575. So this is showing you what I've been talking about all the time. The volatility index is up. It's at 1449, up 0.62. But there are just too many people that have been missing the moves, and are just now saying, you know what? I've had it. I've got to be in this market. That's what it looks like to me. Let's run the numbers. The Dow is up 57 at 16,187. The S&P is up 3.51 at 1844. The comp index is down 1.5 at 4271. A big laggard there today. You've got gold. How about that? Gold is actually down $3.30 at 1321. How about that? We haven't seen that for a while, but I do believe that gold is making a little bit of a short-term top right here. You've got silver down a penny at 21.80. Crude oil is up 42 cents at 102.88. Hey, that was a quick move from the 90s to the 102s to 10. This is a good move. You got bonds up at 126.03. No. 130, sorry about that. What's the TY? Oh, that's the TY is the 10-year. We've got 133.17 for the bonds, up 7. You got the TLT actually quite working up a nice base at that 105 level because it's now at 107, up 18 cents. But I'm still saying, and I've said it for ages, it's getting boring actually, that bonds are in a trading band, interest rates in a trading band, and just like the dollar. And the euro, in fact, was in a very strong leg, E up, EUR, USD. I want to go to our callers, a bunch of callers waiting in the wings. Yep, leg B in the euro, looking great. And our first caller is Marvin in Orlando. Hi, Marvin. How are you?
Hi, how are you? Thank you for taking my call.
My pleasure. What would you like to look at?
I was trying to find out what's a good entry point on Twitter if you see that's a good buy at some point.
Okay, now I'm looking at Twitter, TWTR. It's down $1.52 at 56.64. It's part of the reason why I think that the NASDAQ is a little bit weak today. I think you've got, let me just quickly check here, Amazon, AMZN, Amazon. Yeah, Amazon down 475. Let's look at Netflix, NFLX. And that's the divergence. Remember I was talking about some kind of a rotation here, either at highs or at lows with stocks that could, in fact, have a chance to move higher and other stocks that are looking very, very weak. And I have to tell you something that in this particular sector, I think there's some kind of a rotation going on. And I hate to say it because it sounds so weird to go from the high-tech sector to the low-tech sector. I think I'm seeing some kind of a rotation, and that's why Alcoa is up so strongly today. All I can think of is that, let me just double check Ford and General Motors. I'm going to answer your question, but I want you to do a thorough, yep, Ford is up. No, it's unchanged now at 1539. It's holding okay. It's not great. General Motors should be up a little bit. Yes, it is. It's up 21 at 3652. No great shakes, but at least it's starting. I'm convinced. I'm going to go right back to your question. What about Twitter? Do you have a position in Twitter right now?
No, I don't.
Okay. I'm going to make it, in my work, I'll make it real easy. Because Twitter is an IPO that doesn't have a great history, the monthly has had a very strong leg A. But when you come down, when you make a low in your IPO month, you come out at 38.75, you go to 50.09, and then you drop to 38.80 and close at 41.57. And then sort of a huge move to the upside that almost doubles everything, goes to 74.73 in December of last year. And look at the two lousy months we've had. Oh, wait a minute. How could that be December? That's December. We're in February. And in February, another ugly month. I'm going to make the suggestion that says two things. Number one is that I think Twitter is going to have to prove itself a lot more. There's a huge gap. It's trying to fill the gap. It's done somewhat of a successful halfway move. The low was 64.80 on the 5th of February, 64.80, and then it gaps down. 53.90 is the high, so you've got a huge 53. Wow, you've got a huge gap, and I'm just suggesting that I would do a little waiting, and I'll tell you what I would do. I'd hold off a little bit. It's at 56.38. I would not be looking to short it, although everything about it says, wow, Twitter, if you don't start to move real soon into the 59.5, 60.30 area, the upside is really limited. But I'd rather look, are you prepared to go either short or long, but your bias is long? What exactly?
I was biased long, but I would just take your recommendation, I guess.
Okay, so this is what I'm going to recommend. It's at 56.40. The 120-minute chart made a peak C1 and a C2. I don't want to go into that in too much greater detail. It's a Chapman methodology. 55.89 was the high at 11.30 on the 13th of Feb. And 58.95, of course, I've already forgotten what I said. 58.98 was the high. And 58.95, 3 cents low. So it's peak C1, peak C2. It could still make a D, but the way I'm looking at this, I want to see our Twitter test 55.45. That was the low of the 13th. Now, if it breaks 55, I'm 55.20, let's say, it closes under 55.20, I don't want anything to do with Twitter. And then I would say, you know what? I don't even know if I want to short it. I just think it's in a trading range right now. It might hold, I mean, for 2-3 points, maybe yes. But I think that the 50 round number low that was made on the 6th February. I'm not sure it's going to get there right now. I think there's a little bit of an upward. There's a strong upward bias in the market, and this one could hold up. So here's my recommendation. Let's see how. I'm going to be watching this together. I might consider it as a trade for my subscribers, but at this point, I'm not even touching it. I want to see how it holds. I don't want it to break the gap low of 54.76 that was made on the 12th, when just oh, that's interesting. 4 o'clock and then overnight. Oh, I see what happened. Okay. And there's a gap of 53.99. 53.99. Yes. I want to see how it can hold the 55.50 area. If it starts to break that, I'm going to say not a chance. I'm not touching it. If, in fact, by later today, it manages to turn around, and this is just an intraday aberration, and it's able to get to 56.70, above 56.90. In other words, I would like to see it touch 57 later today and then close somewhere around 57.40. I'd say as a trade, it might have a bounce, and that bounce would say if it's able to break above 60.30 by Friday afternoon, by Friday's close, then there's a good chance the following week it works its way to 63. I see such limited upside at this particular point based on the pattern that's unfolding with the stochastics poor in the daily and the MACD. I want to see how it tests. I'm going to even say I want to see how it tests the whole 55 area, 56 to 55 over the next 2 days. I'll talk about it again tomorrow if it starts to close well and act well tomorrow. But at this particular point, I'd hold off. Number one, I'd hold off because intraday it could actually start to break down. It hasn't shown strength yet. And the weekly chart is under the 9 EMA, and that's really important to me. If it can't close above the 9 EMA at 57, above 57.72 on Friday afternoon, that's going to say, uh-oh, the 9-period moving average in the weekly is really strong resistance. And I would like to be looking at this as more of an intermediate-term buy. So I don't know if that was actually part of your question, but that's the way I would like to be looking at Twitter. I'd go from short-term, but my thinking would be saying, wow, I'm beginning to like this action very much because leg B in the monthly could start. I don't see that yet. Hold off. I think a lot of people are looking at Twitter. I recommend hold off a little bit. Let's see how it tests this kind of area for support between 56 and 55. If it holds well, I'll start talking about it tomorrow. Maybe you can pick something up then, but I would not be doing anything right now. It just looks to me like it's having a tough time. What you really want to see because of that gap, you want to see this get above 60 as soon as possible. If you haven't spoken to me and it's starting to get to the 15, you're on in, and it's a 58.60 or 58, somewhere around 58.50, 58.60, you might want to nibble a little bit, treat it as a short-term trade. That's the best I can do there. I hope that helps you, Marvin.
Thank you very much.
Thank you for calling. We're going to go to Nahid and Dale straight after this break, folks. The Dow's at 58, S&P's lagging. It's up at 356. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. We are back. As I say, Dow's up 56, S&P's up 3.5. I was asked a bunch of questions. I'm going to try to get to them in between our callers. We've got a bunch of callers as well. Just real quickly, let me just say, CORN, C-O-R-N, it's the ETN. It's at A, B, C, D. It's in leg D. It's actually trying to make a peak D, but the weekly is improving tremendously. Coffee, remember I said I love the action of coffee. Coffee is still really strong. This is leg F/B in the daily, E in the weekly. A huge leg A in the monthly. I don't know if I've run out of time. Let's go to Nahid in Safety Harbor. Hi, Nahid. How are you?
Very good. Thank you, Basil. Thank you for taking my call.
My pleasure.
I like to look at Facebook.
Okay. So you have a position in Facebook?
I already have a position. I was thinking about adding to it, but I'm not sure.
Okay. Facebook trading right now at $68.99. And, I meant to mention to Marvin in Orlando. Marvin, out of choosing a stock like a Facebook, which is actually proving itself, even though it's extended right now, and looking at a Twitter, which is fighting to regain its composure, let alone its upward trend, I would choose out of the high-tech sector, call it a high-tech sector, I would choose a Facebook and rather buy fewer shares in Facebook because it's now at all-time highs, but it's an IPO, gone from 17.55 to today's high of 69.05, rather than fighting a trend. And what would happen is, you buy it now and it suddenly pulls back. So it pulls back to 65, but at 65 it should find support and actually try to go a little higher because the stochastics at 97% and the MACD is good. So now let me answer Nahid's question. First of all, congratulations in your entry point, because if you've been holding long, Facebook is one of the stocks that is one of the leading stocks. It is a real winner, and I don't think real winners in this particular environment are going to stop being real winners just out of the blue because something happens. It has to be something very serious. I put Facebook now into the category before. He was an extremely naive guy. Of course, I'm always forgetting his name, whatever his name is. And at the same time, he was so brilliant that anything that he reads or hears about, I'm pretty sure that he just absorbs in a split second, in the time that most of us would still be reading it. He's already absorbed it, and he's already moved on to the point. In other words, he's already moved on to try to resolve what he's looking at and turn that into perhaps another accomplishment. And look at the way he turned around Facebook at Zuckerberg, right? I think that's his name,
Yeah.
Right? And look at the way he turned around Facebook from that disastrous IPO, which was offered at the wrong price, and he's turned it around. And now I think he goes into the category of the very smooth talkers who produce the goods, like what's his name from CRM, Salesforce.com, like Elon. What is his name? Why am I forgetting all these names? I should write them down. Who's the? Of course, now I'm just blanking out completely. Tesla. Who's the Tesla manufacturer and creator? I mean, these guys are producing the Elon Musk and Benioff. Thank you, guys in the den. And they're producing the goods. And now I have to put him into the category of being the ultimate businessman. He wasn't before. He was just a creator of ideas, putting in. I love it. So now what would you do to get in? I'm going to make the suggestion that says, because we have gone today, let me just double check. We have started leg B at exactly a left side, right side price time match breaking out in the Dow, even if we pull back by the end of the day. And that's kind of what I was expecting, that we would get A to B, pull back, and then you'd get C. And because this was, I don't have to tell you about this, Nahid, because you know about that already. The Chapman wave squash between the MACD and the stochastic,
Yes.
because that's in place, it's telling me that there should be a strong, powerful move to a leg C. And then leg D in the Dow and the S&P will take a little bit longer in time before they culminate some kind of a move to the upside. So the way I'm looking at this is Facebook is really a leader. It is both a leader. It is in leg E in the daily, although it could easily have recycled to a brand new instant restart. You know about that. The weekly is in G/C, but everything about it says C rather than G. In other words, the low bar was really right there the week of the 29th of November at 43.55, acting beautifully. Leg C, I'm going to call it C/G. And the monthly chart is in leg C, and leg C says there should still be a D. I love it. And the only thing I can say to you is I would start another position, a trading position. It's at 68.93, between 67 and 66. Between 67 and 66, and 65 would be some kind of a stop in that position. I hope that helps you, Nahid.
Thank you.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We're back in the Dow's up 56. S&P's up 349. It hasn't moved very much, has it? So I wanted to do this. Just one quick thing for Night, if she's still listening. In terms of Facebook, I just wanted to say 2 things about it. One is I would do a starter position of splitting a trading position. And that starter position would be around about 67. The 9-period moving average is 67. I believe this is really leg B up at this particular point in the 120-minute chart. So that would be, and I would actually say I would add a position at about 65 to 64.5 if it even got there in this particular move. So you might have patience and trade it saying, I'm starting a position which might not work out right now. It might need a couple of days to consolidate, but I might be able to pick up another position, and then I've got the 2 positions at a lower cost, and then what you want to see is you want to see 69.80 to 70.30 as by next week, Wednesday or Thursday. Sorry to interrupt because we're going to go straight to Dale in the Cayman Islands. Hi, Dale. I hope you are still there.
Yes, I am still here, Basil. Thank you.
Good. So tell me, you'd like to look at what?
Well, I'd like to look at FEYE, but I just wanted to let you know as well that Twitter, one of the reasons it's probably selling down today is the lockup just expired on it, too.
Oh, well, of course. I forgot all about I can't keep up with all these things. You're absolutely right. But it's also telling me price-wise, that it has been vulnerable, and sometimes that vulnerability is telling you that, in other words, if it was moving higher against that backdrop, I'd say, wow, that is fantastic action. But thanks for the information. But actually, then whatever I discussed really does apply, because it'll start to show strength. And that's what I was saying, that if it shows strength after all the selling is done, that's going to be positive, and you can add on increments as it moves higher. But you wanted to look at?
I want to look at FEYE. Now, it had a little bit of a disappointment on earnings, and they have announced that they're coming out with a secondary. I think it's going to be in a couple weeks, but they haven't priced the secondary, or they haven't done a date just yet. But I really like this company. They've got a really disruptive technology with regards to security threats for websites and companies and everything like that. And I feel they're a unique play in that field just with the technology that they have.
You know, everything I've heard about this company has always been very positive. I was a little surprised about the bad news, but if you look at this, the chart formation that do you own it at all?
No, I don't. I was in it for a while and took some profits, but I'd like to get back in on more of a holding situation.
You know, let me just, I'm going to go through this purely as a chart pattern, but I do want to say something. As an IPO, as opposed to Amazon, as opposed to what we were looking at with Facebook, this one has a different chart, because it IPO'd in September of 2013 at 40.30. It goes to 44.69, drops to 33.25, closes at 41.53, and then it dips 2 months later to a lower low at 33.30, and then it just takes off, and it fires away and goes to the most recent high this month of 79.72. So it's more than a double. It's about 115%. And then it's been consolidating with a very long wicked doji candle, up and down. And it's telling me that it could be in a price, how can I put it? It could be in a price trap just for a little while longer in the monthly chart. Then I say, well, why don't you go to the weekly chart and check it out? Well, weekly chart is in leg C, very quick A to B to C, probably making a C if there's a peak C if there's no higher than 79.92 this month, but there's still got a lot of days to go this month. So I'm looking at it and I'm saying, I keep missing this. I see it go by in the ticker, and whenever I see it, it's like up. This thing really moves. It's really like up 3 or 4 points or 5 points, and then I forget about it because it's already moved, and then I turn around and it's going higher and higher. But here's the trick. There's a technique that I call the Chapman wave stalk leg formation. And what happens is there's a strong move to the upside made up of a number of legs, and then it stalls and makes an oval pattern. And it's so funny because it really is not a rectangle. A rectangle is when I go to the E-minis and I show this pattern. That is a rectangle pattern from there to there with a breakout today. This is different. F-E-Y-E, Fire Eye, sorry, Fire Eye, Inc. F-E-Y-E is a symbol, trading at 72.49, up 59 cents, is making that pattern. And what this pattern says, there's a whole bunch of things that go with it. It says that I'm probably at that the stock is probably at a peak C on the 11th of February, that there should be one pop-up that takes you above 79.92, especially that had a round number 79 open, and now it's been digesting the gain since then. The MACD's down, but it's not bad. It's down. The stochastic is the one I'm watching closely. It's a 52%, which is not great. I'm suspecting this is going to have a big move. If it's able to not break, in this pattern says don't break below 66.66. That's 6 points away, but don't break under it, because if you do, this pattern says, short-term tops be made. Now you're coming down. You're going to start to fill some gaps or do some other things. However, if this thing takes out 75.89 in the next 2 to 3 days, and I'm a little surprised. Today it's up 71 cents, and the market is generally up, not huge, but up. And I shouldn't say surprised. I'm pleased that it's holding the 9-period moving average. I would like to see it break above 75.30, and here's my trading recommendation. If this thing breaks, if FEYE breaks above It doesn't even have to hold. It just has to get above 75.30, preferably 75.89, but 75.30 is the first one. That's yesterday's high. If it gets above that, there's just really a good chance that over the coming week, it's going to test the high of 79.92. That should take it to leg D, and it should take it somewhere between 80.75 and 81.90, somewhere around there. Then you've got to be careful that this pattern, the stork leg formation, when this is the body that's forming, the neck will start 1 penny above 79.92, that the neck and head that form don't create what I call the beak, and that beak comes right back to test at least 79.91, but most probably back into the 70.61 area. So I'm going to do two things. One is I'm going to suggest as a shorter-term trade, which might turn out to be something longer, but right now we're treated as a short-term trade. If it goes above 70, that's 75.30. That's a lot of points, 75.30. And then you got to say, yeah, and that's fine. That's 6 points altogether. If it goes, I'm even going to suggest lower down. If this thing can go to 74.20, I'd nibble. I'd start a position. If it takes out 75.89 or 75.90, I'd add another very small position. And then the moment it breaks, if it's going to do that, 79.92, the high of the 11th of February, I take some of one of the positions off and let it just run for that leg D, or I'd raise the stop and have both positions run all the way to leg D, and just keep raising the stop on at least one half of that whole position. And this is what I'm looking at. The reason why I say it's a possible trade that could last a little longer is if next week it breaks above 79.92, that's leg D in the weekly with a very quick A to B to C to D, and that confirms again that you should be coming in for a bit of a breather, in other words, coming back to where we are now, but it'll be a nice trade of about 5 to even 8 points, and then you could get out and or let the position stop you out, and then what happens is if it comes back again, we'll wait, because I'm looking to get into this as well, because the monthly is very strong. This looks like one of those IPOs that eventually will make B, C, and even D in the monthly charts. That's the way it's looking right now. So I do like, I'm with you, I like it. I keep missing it. You've already been in with a very nice trade. I'm just suggesting that as a trade that might turn out to be a lot of points, going even from the 75s to the 81 to 80 to 81 area, that's 5 to 6 points. That's the way that I would trade it. And it might turn out that one of your positions actually stays there, because when it digests after leg D in the weekly, it really doesn't digest very much, because it looks to me like this is one of the stocks that is one of the in stocks in the fund buying crowd. That's the way the chart looks. I hope that helps you. And everything just fails if at any point it takes out the low of 3 days ago. If it takes out 66.66, then you've got to be careful. But so far, it looks quite good.
Okay, yeah, that also may tie into the secondary if that comes out in like a couple weeks too.
Oh, that would so then it could spike up, and then suddenly the secondary is announced, and whoops, it slides back 6 to 8 points.
Yeah,
that could happen.
Yeah. Well, they've already announced the secondary. They just haven't priced it or put it into the market, and they've hinted that it may be a couple weeks away or something like that.
And also, you know, with secondary, it's really hard to tell. Sometimes they drop more than you would expect, and sometimes they don't do anything. So I can't really say. So that would be my trading plan. Yes, just one other thing I'll add before I go to Janice, who's waiting, and that is you could even nibble on a position here at 72.45, but I really do call it a nibble. Why? Because I would have a stop on this very short-term position under 71.30. So that's like $1.25, and this starts your position if it's going to work. I suspect if it's going to work, what we're talking about, it should be working by Thursday to Friday.
Okay, great. Thank you very much.
Thank you so much for calling.
Basil.
Always appreciate it. And hey, Cayman Islands right now sounds absolutely fantastic. We still got snow here.
Okay, yeah, feel free.
So nice thanks for calling down. Let's go to Janice in Bucks County. Hi, Janice. How are you?
Hi, Basil. How are you?
I'm well, thank you.
You're looking at Amazon.
I'm sorry, you're looking at?
I'm looking at Amazon right now.
Okay. Do you have a position?
I do not have a position. I originally had one a while ago short and took a couple points from that. And now I'm wondering if this is in consolidation or it's making another move down.
Well, I want to do one thing right off the bat. I have to congratulate you in being short and being correct. Now, your biggest, the bugbear that you're living with right now is that you're saying to yourself, oh, man, I should have stayed short, right?
Right.
But you did take profits. And you know what? In a stock like Amazon, which has just been an absolute monster, if anything's going to be called monster, this one should be called monster. It is really, it's like a tiger. It's just been ruthless in its devouring of everything that moves in that whole online marketing area. But I think that it's time for a big digestion in Amazon. And that's what I'm talking about, this rotational aspect. So when I'm looking at Amazon, it's made a peak E with a silent doji back in December of 2013. January made a new high and then pulled back very sharply. It's testing the 9-period moving average, but the weekly and the daily have the Coca-Cola look that I was looking at yesterday for our caller who wanted to know about Coca-Cola. And I'm going to suggest something here that says the same pattern that I mentioned to Victor, that H pattern, I think that's here in Amazon, and everything about it at 347 AMZN, trading down 578 at 347.87. Everything about it is saying it wants to test the 335 level of the 200-period moving average. It doesn't have to hit it exactly, but that would actually be my target. And where would that be? It would be the wick of the candle of the 7th of February, the week of the 7th of February, with a low of 337.13, and this is 2 points lower for the 200-period exponential moving average to make leg D to the downside. And that's all I would do. I'd probably want to step aside after that, maybe even play a bounce to make the H pattern that goes to an M pattern. So, number one, I'd be looking on any bounce, even today, towards the 348, anywhere between 349.80 and 350, or I'd say 350.90, somewhere around there. I'd be looking to maybe short it, because that's the way it looks right now. And I'm expecting the H pattern to unfold the moment it takes out 346.32, which is just 2 points lower. So that's my thinking right now. Now, if I'm wrong and it bounces further rather than going down in the next 1.5 days, 356 is the 9-period exponential moving average. If it does start to bounce and you want to wait, you could wait for a move closer to 353. I don't think it's going to get there. I think that it's looking very weak. I just think it needs a timeout, and I think it needs to start building profits, and that's not what they've been doing. And
yeah, I've been looking around the 250 line, where it seems to, hit all the time, one way or the other. And
are you talking about the moving average?
Yeah, well, no, right around the 200 I'm sorry, not 250. I got to get back to my computer here. Around the 350, I'm sorry.
Yeah, okay, well, the 350, it's at 347.95. I'm saying that if there is a 120-minute chart says that it's probably not going to bounce, that you won't get a second chance before it drops. But I'm saying I would 351.81 is the 9-period moving average in the 120-minute chart. And the last high was 359. I don't think it's going to make 359 on this move. No, I'd say about 2 points higher, and I would do that, and I'd have maybe start one position and you can add to it later. I'm looking at downhill for Amazon, at least shorter term.
Thank you.
Hope that helps you. Thank you so much for calling. And I love Bucks County. I've driven through it, and it's such a beautiful place.
Thanks.
And I'll be back with
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back. Dow's just a tad, up 52, S&P's up 322. And, you would expect after such a spectacular move to the upside, there would be a couple of days at least of some kind of consolidation. I would like that very much. Fortunately, the stocks that we own for my opening call have had fabulous days, 2 up, over 3% or 4%, and we are still long the SPXL, which is the 300% long the S&P, and we've been that way for about a week now. Now, let's go straight to Ben, waiting patiently in Tallahassee. Hi, Ben. How are you?
How are you doing?
Very well, thank you.
Good. Upward movement only. Is there a value in the S&P 500 that if it was hit would give you much more confidence in the letters of the peaks?
And I'm
sorry, for the weekly and the monthly.
For the weekly, okay, monthly, I have absolutely no question about it. It's in leg D, and if the S&P goes above 1850.84, what happened? 1850.84, the high of January. Let me just put it on that side. That starts leg E. Now, the real question that you have, I think, first of all, this is still leg A in the, I can't believe it, in the daily. Now, there are times, but they are very rare, that you can go and make a double top with a fresh start that really should be A, but because it stops dead at the previous high, you just have to take into account that the stochastic and MACD are failing and that this move was what I call a right arm extension, and that no matter what the lettering is, it fails. You hardly ever get all-time highs at A's or B's or C's. They're usually D, E, or F, or G. So all I'm going to say to you is, for me, you're looking at the upside. The upside resistance at this particular point, we are about to re-challenge that in the weekly, in the monthly. I've got a peak F in the weekly chart, and I really have not been able. I've tried every which way to count it differently. I can't count it differently. If this goes to 1850.55 on any intra-week basis, I really have to call that A. I suppose I could call it G, but wow, everything about it spells that it should be A in the weekly. But your question really would say, what level would I be absolutely convinced that we've done with the consolidation, we're starting to match the other moves that we've seen where there's been an extension from peak C in the monthly to D, and then one quick pullback, and then E starts, and E goes on for 1 or 2 months. That would match exactly what we saw back in October of 2008. And that would say to me that if the S&P breaks above 1860, I can anticipate it's going to go higher, number one. And I also have to anticipate that together with the IBB, the NASDAQ biotech sector, I have to really be watching to see that we aren't about to make a very significant top. I don't think it's going to work quite as easy as that, but that's what I would look at. So the answer to your question, breaking above 1860, I'd have to say, wow, this is great action. But now I also have to have 1 foot on the accelerator, 1 foot on the brake, because now I have to use all my powers of analysis to say, where is it going to stop? But boy, if it broke above that level, I think that buyers would be coming in, and I suspect it would go even quite a bit higher. Does that kind of answer your question?
Yeah, absolutely. Now, would that also mean that the bigger 2-digit pullback would probably come a little bit later, or could we have possibly gone through that phase?
Well, this is the phase that said the pullback that started off would turn out to be between, depends which index, 5% to 7%. That, because of the power of the Qs. Look at the QQQs. Oh, man, we've got to break. This is it. So, Ben, let me just say, I'll deal with it tomorrow in much greater detail, tomorrow or Friday in much greater detail. But the Qs are saying they've broken out in the daily to leg A, and it should go to a B, C, and a D in the daily at least. So I'm still very positive. I'll do more work over the next 2 days.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.